What is up guys, Taiki here, and I hope everyone had a great Thanksgiving. In this Farms of the Week episode, I'll be going over a bunch of stablecoin farms across a bunch of different ecosystems. So timestamps will be in the description so you can skip across, I guess, farms or ecosystems you don't really care about. But I wanted to make this video because, well, in the most recent market correction, everyone was like, yo, Taiki, like, what are some stablecoin farms? It seems like on the way up, people don't care about stablecoin farms, and then on the way down, people are like, okay, like, what are some stablecoin farms, right? I mean, it's kind of how psychology works with markets. But, I feel like it should be the other way around, but, it is what it is. But, even if you are super bullish and you think it's going to keep pumping from here in the markets, right? I do think it's important to always know how much you can earn on stablecoins in the event that you do want to take on profits, right? Or to take profits. It makes profit taking a lot easier when you can know that, hey, like I can go on this application on this chain and earn 20, 30, 40% yield. So, that's the main reason I wanted to go over all these farms, stablecoin farms, and also get across this point that I don't think that people should be 100% long crypto. I mean, I'm super bullish crypto, and like I have the majority of my net worth in crypto. But being 100% long crypto kind of takes a toll on our mental health. And if we're not thinking rationally, our decision-making abilities are gonna just like dwindle and go down. Even being 90% long crypto and have 10% of your portfolio farming stables is going to give you the upside volatility that crypto could give you, but the stablecoin portion will help you sleep at night. So my rule of thumb is I generally hold at least 10% in stablecoins. Of course, if the market's correct, like 20% or whatnot, I'm going to deploy those stables. I don't mind going under 10% in those events, but generally, as a rule of thumb, I always hold stablecoins because, in those corrections, right, that we had on Friday, I don't really mind, right? I'm not really hurt, and I have a plan. I'm earning, great yield on all my assets, and that way, I'm not gonna get I'm not gonna get scared and sell my assets, right? Because also, if you're all in all coins, right? What are you gonna do, right? When the markets are down 20%, right? It's gonna be really hard to make rational decisions. And this is kind of my plan when it comes to profit taking, right? Because crypto is a dangerous, super dangerous industry to just be all in on, because as the price of assets go up, people become more bullish, right? And that's natural, right? That's normal, right? It's like herd mentality. It's because if things are going up, then everyone's net worth is at all-time highs. So obviously it's normal to be super euphoric. But I feel like it's good to have these rules beforehand, before Bitcoin gets to these levels, right? Because if you view the price of Bitcoin as the overall health of, I guess, the barometer of the health of the markets, it might make sense to have these rules in place where, as the price of Bitcoin goes up, maybe you just have target stablecoin portions or target stablecoin allocations in your portfolio. And obviously, it's not going to be linear, right? I'm never going to be all in stablecoins under any circumstance, because I do think that I do want to maintain exposure to markets. But this is kind of the general idea that I have for myself. It might change in the future, but just slowly sell, slowly accumulate more stablecoins on the way up, because I don't really have the desire to sell tops. I don't have desires to buy bottoms. My desire as a farmer is to make money, right? And I don't have to sell tops to make money. I don't have to buy bottoms to make money. I just have to manage risk, earn yield, and be smart about it. And lastly, before I get into stablecoin farms, I do want to go over tricrypto. I do think it's severely underrated, and I do think that this is a good way to de-risk your portfolio on the way up in the event that you want to take risk off. So how I think about it is, as I take profits from all my assets, I'm going to think of Curve's tricrypto pool as my savings account, right? Because how this works is it's a liquidity provider position, right? It's an LP position where you're providing 33% into stablecoins, 33% into Bitcoin, and 33% into ETH. And I consider it to be my savings account. So, hypothetically, let's say you're earning $5,000 a month, and or I guess $5,000 worth of disposable income per month. Maybe instead of dumping it all into Bitcoin or ETH, maybe just dumped it into here, right? Not financial advice. You can do whatever the hell you want, but you can earn roughly 20 to 30% on Bitcoin, ETH, and stablecoins. And I do think that yes, it's not gonna give you the most upside, but it's gonna protect you to the downside, and it's a really comfy position to be in. So, that being said, let's kind of go over stablecoin farms on all ecosystems. Not technically all, because there's way too many ecosystems here, right? But I'll primarily go over ETH, BSC, Solana, Avalanche, Terra, not Tron, Fantom, Polygon, Cronos, and I believe Celo, and Harmony too. So let's kind of get into it. So I'll just go over Ethereum, right? I don't farm on Ethereum, right? The gas fees are way too damn high, but I do think that maybe some people want to know, right? And I feel like the majority of the innovation happens on Ethereum, and then like other devs like fork it into other chains, or these developers bridge their application into other chains, and we can enjoy DeFi on these like cheaper L1s. But I do think that tracking Ethereum applications is important, just because this is where the majority of the innovation happens. So first, I'm going to go over Convex, right? Convex Finance, closely related to Curve. I consider them to be a blue chip, and you can single-sided stake your assets, such as the Korean won, the British pound, Australian dollar, right? I consider them to be stablecoin pools, and if you scroll down, you can earn roughly 20 to 30% on these stablecoins. Not gonna lie, I mean, I'm not gonna do this because the gas fees are too damn high. Even here, even the application says that Ethereum blockchain is currently experiencing high usage, making the transactions very expensive. And I mean, the GUI here is like 120, so it's not even that expensive. But I guess the Convex team, they're trying to warn people, hey, it's super expensive. The other thing I want to go over is Popsicle Finance. So this is a Uniswap v3 optimizer. I'm not going to get into the intricacies of how Uniswap v3 works, but essentially, instead of providing liquidity, right, 50-50 for, let's say, USDC and USDT ETH, you can provide liquidity for specific price ranges, therefore concentrating your liquidity so you can deploy less capital and earn more fees. Right? So, I mean, you can do this yourself. You don't have to use a Uniswap v3 optimizer for stablecoin pools, but if you're providing like liquidity for, let's say, ETH and USDC, you might want to, use an optimizer such as Popsicle. Because optimizing your liquidity when price changes, it's really difficult. So maybe it makes sense to outsource it into Popsicle Finance. So the cool thing about Popsicle is that these APRs don't really pay down in the farm token, right? Because most of these other farms, like it pays you in the farm token. So if the price of the farm token goes down, then your APY also goes down. But because this is purely from swap fees, right? Just by concentrating your liquidity, these APRs are much more sustainable. This TVL on Popsicle isn't that high, given transaction fees are so expensive, and maybe the market thinks that these I guess that application is not safe, right? Because they were exploited back in August. But you can earn decent yield on such other assets such as ETH USDC, right? 80%, no farm token, just purely from just being a liquidity provider. Okay, that being said, let's move over to the Binance Smart Chain. I don't farm on Binance Smart Chain either, right? Because it's kind of difficult being on BSC as a US citizen. However, this is something to look into. So let's first connect to BSC. I'll be doing a lot of this, right? Switching from one chain to another. But the one farm that I think is interesting is the Frax BUSDC LP on Beefy Finance, right? TVL is very low on this one, right? So, I mean, if more money flows in, the APY goes down. But Frax is a stablecoin, BUSDC a stablecoin, and you can be a liquidity provider on ApeSwap and earn 68%, right? So I mean that's going to be all for Binance Smart Chain, but I thought it's an interesting farm to consider. So now let's go over Solana. So I don't farm on Solana either, just because yes, it's super fast. Yes, there's a lot of hype with the VCs and whatnot, but from a DeFi perspective, as a farmer perspective, the farms on Solana aren't that great, right? I mean, they're good, but if you compare it to the farms on Harmony, Avalanche, Fantom, Luna, it's comparably not that great. For example, you can you can like farm these tokens on Sunny Aggregator, right? This is an auto compounder, but the APY is not that great for stablecoins. The one stablecoin pool that I think was interesting is on Raydium, right? This is one of the AMMs, and you can earn roughly 26% paid in purely fees, right? So no farm token, just purely from fees, and I think it's interesting, right? And there's a bunch of volume going through this pool with only $5 million of liquidity, therefore lots of fees. Okay, now let's go over the Avalanche ecosystems. I mean, this might be redundant, but I do think it's important to kind of go over, this repetition is part of how people learn. So let's kind of go over the Avalanche ecosystem. So, Alpha Homora, good way to do so. It's sort of like Terra from the Fantom ecosystem. It's leverage yield farming, where you can lend out your assets to the people who just like leveraging, their LPs, and you can earn these interest rates, right? These are set by the market, so the more people are borrowing, the higher these APYs are. Also, another good way to think about, okay, what can I earn on the Avalanche ecosystem is going on Yield Yak, right? Yaks farm better together, sure. You can deposit single-sided staking, right? So for USDT, they'll put it into Benki. they'll harvest those rewards like in the forms of AVAX and key tokens, sell it, redeposit it into USDT. So it's essentially an auto compounder for Blizz, Benki, Banker Joe, etc. And you can earn pretty decent yield actually, like whether or not you're farming on Pangolin, Axial, Aave, etc. Right, pretty decent yields. And lastly, obviously Curve, right? Curve, you can earn roughly, what is this, like 16.5% on stables. I believe, I mean, these rewards, these AVAX rewards are going to be, they're going to run out soon, I believe, because Avalanche Rush, I believe the Curve and Aave rewards were only, I guess, allocated for the first 3 months, but I'm sure that it's going to get redeployed, right? I feel like if I was Ava Labs, I would, keep incentivizing these pools just so TVL remains in the ecosystems. You don't want, people to come to Avalanche for the farming rewards and then leave immediately after the farming rewards are over. So I do think it makes sense for them to, re-incentivize these pools in the future. Okay, so let's go over the Terra ecosystem, right? So I'm going pretty fast, but I have a lot of ecosystems to cover, so it is what it is. So obviously the Terra ecosystem, you can earn roughly 40% on your stablecoins, which is pretty cool. So I have videos covering how to do this, where you have to combine two protocols, Anchor and Mirror. So how you essentially do this is, let's say you start out with 10,000 UST, right? Which is the Terra US stablecoin. Algo stablecoin, and you can put $10,000 into Anchor Earn right here, right, and earn 19.5% roughly. And the cool thing about the Terra ecosystem is that you can take your UST, right, and use this Anchor position as collateral to short farm. So what I've been doing in the past is I've been taking my AUST and using it as collateral to short farm, right? So you can use the AUST as collateral here, right? So what I've been doing is you can take, for example, 10,000 UST, right, which is going to be consistently earning 19.5%. Then you can take roughly $5,000 worth, right, or you can use your entire position and farm roughly $5,000 worth of gold, right? I recommend short farming gold just because, gold doesn't really do anything, right? I'm only in this for the farming rewards, not really for not because I think gold is going to go down. And if you look at the historical short farm APRs for gold, it's roughly at 24%. So I decided to input 24% here. And what you can do is you can just borrow gold and sell it for UST. So when you short farm gold, you get UST in return, right? Because you're borrowing gold and selling it. It's going to take you 2 weeks for this UST to unlock. But once you have the UST, you can take the $5,000 and deploy it back into a long farm. So you can go back to the farm tab and maybe you can long gold again, 18% for delta neutral, right? It's a delta neutral strategy. Not technically delta neutral because you're sorting $5,000 worth of gold and you're only longing $2,500. If you want to be technical, it's technically not delta neutral, but it's as close to delta neutral as you can get. So hypothetically, let's say you want to just farm gold, right, at 18%. What you can do is you can go to Apollo, right? Apollo is an auto compounder on the Terra ecosystems. There's also Spectrum, but I choose Apollo because I consider them to be a little bit safer, right? They're backed by Do Kwon and whatnot. But IAU, which is gold here, you can earn roughly 19.3%. So you can short gold and then long gold again and earn 19.3%. The reason you might want to auto compound is because you might not be bullish the Mirror token, right? Mirror is a farm token, so maybe you just want to dump that token immediately and collect the yield. So if you do the math, you can take 24% on gold and then 19% on gold again, right? Longing and shorting, and then 41% on your initial $10,000 worth of stablecoins. This is super cool. It's one of the reasons the Terra ecosystem is gaining lots of TVL, and the fact that they only have 10 applications and they're in the top 5 in terms of TVL, I think is impressive enough. And when Astroport and Mars comes out, I think TVL on Terra is gonna skyrocket. Okay, now let's go over the Fantom ecosystem. There's also decent stablecoin farms on Beefy for Fantom. Let me just connect to the Fantom ecosystem real quick. Okay, and you can single deposit Frax on Scream and earn 33% there, which is pretty interesting. Let me kind of go over this other stablecoin farms here. Right, you can earn roughly 40% on TUSD, right? This is using Scream. Essentially, you deposit an asset, it'll harvest Beefy will harvest those farm token rewards for you, sell it for TUSD, and just keep dumping it into here. So if you just want to increase your stablecoin stack, this could be a good way to do so, right? USDC might 30%. Also Curve, right? Curve is also good. Roughly, what is this, like 12%? No, 13% on stablecoins here, and then 14% on stablecoins here as well, and tricrypto here as well. So Fantom is a pretty good ecosystem to farm with. I think it's really underrated. And I purchased some Fantom recently, so hopefully it does well. Let's go over to Polygon ecosystem. So one thing I want to go over is real quick. Let me connect to the Polygon ecosystem. Whoops. Okay. One is Balancer, right? So let's wait for this to load here. So this is a way for you to, I guess, deposit or be a liquidity provider for more than 2 assets, right? So if you check Balancer, you can be a liquidity provider for up to 10 assets or whatever. But 23% APR on stablecoins, right? On Polygon, pretty alright. I found this earlier, which I thought was pretty cool. So this is Kyber, right? They're also, I would consider them to be a blue chip, just because they've been around for a long time. I wouldn't consider them to be, like a top, DeFi ecosystem. But the farms are pretty decent. Let me wait for it to load. But anyways, as I wait, let's go over to Polygon Beefy Finance as well. And you can kind of see the trend, right? Beefy Finance, I think, is the safest auto compounder in all of crypto, just because they have the Lindy, they've been around for the longest time, and you can just filter for stable coins and find out how much yield you can earn on all these coins. So the one I wanted to show you is the British Pound USD CLP, which isn't loading for me here, unfortunately. But what you can do on Kyber is you can be a liquidity provider for example, the Swiss franc and USDC, right? And for these, I guess, foreign currencies, there's not going to be that much impermanent loss. So, if you provide liquidity for the British pound and USDC, earn 39%. That's essentially, just farming with stablecoins. So unfortunately, it's not loading for me, right? But it's available on Kyber. And then Curve, Polygon Curve. That's right. Crypto pool is actually pretty decent, roughly 30%. And the stablecoin yields have kind of gone down, right? The max you can earn is roughly 20% here, but the DAV pool has diminished significantly, like roughly 10%. But I feel like the fact that we're kind of crying over 10% yields in DeFi kind of shows you how great these yields are to begin with. Okay, 2 more ecosystems, I believe. Let's go over to the Celo ecosystem. I think the Celo ecosystem is undervalued. Oh, sorry, not undervalued, underappreciated. The bridging experience to Celo is pretty poor. The UI is pretty poor. It takes like 4 hours for your assets to settle. And when you go to the optics bridge, it doesn't tell you that it's gonna take 4 hours to settle. So when I first bridged the Celo ecosystem, I was like, where are my assets? And I had to as I was sweating, I had to go to 3 Medium articles and find this obscure Medium article that was like, oh yeah, by the way, it takes 4 hours to settle. I'm like, okay, put that in the UI team, come on. Anyways, Sushi Swap. Sorry, I don't mean to bash on the ecosystem, bash on the Celo team, but it's a new ecosystem, and I'm sure they'll get there. But Sushi on Celo, pretty good. So these are the yields, right? There's a DeFi for all fund where they have these incentivized pools. I believe Aave Curve is coming soon, right? Soon, whatever that is. But these pools are pretty cool. 86% on ETH USD, pretty decent. ETH Euro, right? I would consider them to be the same thing, pretty decent. CUSD DAI, CUSD Euro, 31%. Celo ETH, decent yield as well. So I was farming this. I believe a few months ago, or I believe whenever they came out, because I was like holy crap, these yields are pretty insane. But I didn't want to deal with impermanent loss. I kind of left it, but just keep an eye out, right? This pool is pretty awesome. I think it's overlooked. Bridging there is a pain, right? Whenever you bridge Celo, you want to always check whatever asset that you're bridging, make sure there's liquidity, right? I think when I bridged Tether, there was no liquidity, so I had to incur so much slippage and whatnot, but that's the name of the game. Okay. Lastly, I'm gonna go over Autofarm on the Cronos chain, right? So this is also an auto compounder for the Cronos chain, and these yields are pretty good. So let's go over the stable coins. I'm not showing up here, but for example, USDC, USDT on very simple DeFi platform VVS. 30% there. You can scroll down. I'm sure there's a USDT, USDC, 30% right on Cronos swap. These yields are pretty good. So, I'm not really farming on Cronos yet, right? I'm thinking about it. But I just haven't had. I guess there isn't really a great reason for me to bridge there yet. But if there are more, I guess, quality protocols that do show up on Cronos, I'll definitely look into it. And lastly, Harmony ecosystem, Curve, decent yield. These yields are going to get diluted, right? Because I think they only allocated roughly like $2 million worth of one rewards. So, as TVL goes up, these will get diluted. But in the meantime, 48% on the tricrypto, pretty good. So, I kind of I was like speed running through all these farms. So, maybe rewatch it if you want to, I guess, like digest these things. However, as a multi-chain farmer, me understanding that all these farms exist gives me a good, I guess, overview of, whether I should bridge to a new ecosystem, because I argue that farmers are the quickest to rotations because farmers are usually ahead of the market in terms of identifying which ecosystem will get the next slosh of liquidity, right? Because money and liquidity follows the yield. So if you can identify these yields ahead of time, maybe you can front run the liquidity by buying the gas token, right? Maybe like Crow or like One, or just just farming up these tokens beforehand, and then providing, or just taking profits as more and more people get you more euphoric. So hopefully this is a good overview. The market's looking pretty good, right? These L1 tokens, I believe, will keep doing well. Ethereum, although it is unusable, looks pretty good. And I feel like this narrative of these L1s are going to just keep continuing, right? Because sure, like Ethereum can catch a bid, right? And maybe go into price discovery, but then the narrative is going to be, okay, well, if Ethereum is, let's say, $600 million in market cap, then maybe Avalanche deserves to be higher market cap, right? Because when it comes to valuing these L1s, it's really hard to value these crypto assets. So I try to value them on a relative basis, right? That's kind of how I've been, playing the markets recently. So if Ethereum goes up, then these other L1s, maybe they deserve a premium. So this constant narrative of L1s being valued against Ethereum, I don't know how long it'll last, but I would expect it to continue. So thank you guys for watching. Hopefully this video gives a good overview, and have fun farming out there.